What's good, team? I had a lot of questions in my free Discord about SMT, so I thought I'd make an in-depth video. I already have my Smart Money Academy on SMT, but this is more like an introduction. This video right here is an in-depth look at SMT. So at the end of this video, you should fully understand how they work, how they function, and how to use them in your trading. So basically, in SMT, what it is a divergence in between assets that are correlated, right? So ES and NQ are correlating assets, and it's divergence between the two. Um, GBP USD and Euro USD are also correlated assets that when there's a divergence, when there's a difference between the two, it's a good inside information that we just had a manipulation leg or something, right? So basically, what it means is, let's say we take a look at this example right here, right? The one in the square. This is for a bearish trend, obviously. So the market's going down. It starts consolidating a little bit here in the middle at like maybe, in discount or something, or in premium, I should say, for a bearish trend. And then we get a sweep of liquidity on one of the pair and the other doesn't, and then it just keeps moving down. So that's a divergence in assets. We had a lower low, or I should say, I guess, a higher high created here on ES, with a lower high right here created on NQ. Now that's called an SMT, which is a smart money technique, which is basically just, a good indicator of a manipulation legs. But what you want to do with the SMT is you want to align it with your trend, your draw, and your bias, right? Everything I do all the time, if you're in my Discord, I align everything with my trend, my draw, and my bias. So if the overall trend is bullish, a bearish SMT is not what I'm looking for a trade. I'm looking for a bullish SMT. I'm looking for this right here, right? So the draw is very simple. It's maybe equal highs, maybe a previous day high, a certain fair value gap. You have to understand that market's always trying to either take out liquidity, retrace to equilibrium, or basically just consolidate, right? So with this draw in mind, you have to align your draw with your trend, and then from there, your bias could be to maybe go a bit lower and then go higher. So the bias can be to get a slight retracement into, let's say, equilibrium, pre and SMT, and then go to your trend, or go to your draw, I should say. So once you have your trend, your draw, and your bias is basically just what you think will happen. As it gets confirmed, that's when you enter the trade. So basically, once you have your trend, your draw, and your bias confirmed, um, or you have them in mind, and then the SMT happens, it's a good sign that your trade is going to succeed. Now, SMTs, it's like I wrote here, SMTs are cherries on top. Okay, they're not a signal. You don't enter a trade simply off an SMT, but they're the cherry on top. They're what makes a trade A plus. They're really, really good to have. They will increase your win rate. You could be cherry picking, I should say, and just kind of going for trades with SMT. Personally, I don't, simply because I'm still profitable even if SMTs weren't there. So why not take the trade? Even if the win rate is slightly lower, it's still profitable at the end of the day. So I still take the trade. But the SMT, when it's there, it gives me the confidence to maybe slap on an extra contract or something, or re-enter the trade for second stage distribution and stuff like that. So I wrote here context. Context, what that means is that you have to understand that SMTs, random SMTs just happen on a 1 minute or something are not kind of ideal, right? You want an SMT that maybe, like, let's say here in my bearish example, right? You could put down your fib, it went to OTE or something on one and the other it didn't. And then with the SMT, you dig a little deeper. I guess I should go like this, right? Let's say this did this right here, and then you dig a little deeper into that OT area on yes, whereas NQ, let's say, had already gone there, right? So this becomes protected. Um, so context is basically just like, where are you on the chart, and does it make sense for that SMT right there to hold, right? Are you in an area? Are you in a fair value gap? Are you in an area basically where the SMT makes sense? Now, I wrote time as well because market open is a good time for SMT. 10 a.m. is a good time for SMT. Any macro really is a good time for SMT. There's PM London. There's a bunch of different things, but I don't like an SMT that happens, let's say, at 8 p.m. Right? Like that's just kind of mid for me. But again, I haven't backtested those quite enough to make a decision on them just yet. But I will say that my favorite SMTs happen between 9:30 and 11, right? I do want to point out that when you have an SMT, you have a stronger and a weaker pair, and you always want to enter on the pair that is more in line with your trend. What that means is that in the bearish trend that we have here, for example, right? We have ES that made a higher high here, and we have NQ that made a lower high here, which means that this high, this SMT high on NQ is now protected. right? Because this right here on ES could go all the way up to here if it wants, and this SMT will still be valid. But as soon as this high here is broken, the SMT is broken as well. Does that make sense? If there's any questions, drop them in the comments below. I'll answer it pretty quickly. But basically, I'm going to explain it one more time so people understand, right? This high here is the SMT is basically created because this high on ES was taken and this one on NQ was not. So this high becomes a protected high, as they called it. And as soon as this high gets taken, the SMT is broken. So if the SMT is your cherry on top, your stop should always go on that pair, and you should always enter on this pair with the protected high, right? To put your stop at the protected high and target the nearest liquidity, right? The reason is that again, if you put your entry here and your stop at this high can get broken through again like this, and the SMT is still valid. It's just like this, right? So you always want to enter on the more bearish pair on bearish trend, and the more bullish trend on bullish trend, which would be this one right here for this case scenario, because this is the protected low. You made a lower low on ES on a bullish trend. You made a higher low on NQ on a bullish trend. Which one is more bullish? The one with a higher low, you enter there. You put your stop at the protected low, which is the one that the SMT will be broken through if it gets swept or broken through, and then you kind of write that out from there. Okay. Now I wrote time frame, which is target the SMT's time frame, right? So if your SMT is on a 4 hour or on a 1 minute, don't go target a 4 hour high or an hourly high. If your SMT is on a 1 minute, the charts are fractal, but you have to stay within your range, right? So if your SMT is on the 5 minute, target a 1 minute high, target a 5 minute high, maybe a 15 minute high. But don't go anything over that. If you have a 1 hour SMT, you can maybe target a 15 minute high, 5 minute high, 1 hour high, maybe a 4 hour high if you want to push it. But again, try to stay within your time frame. So if your SMT shows up on a 15, now it's gonna show up on multiple time frames, but I like to have some inducement in between. So your SMT, obviously it could be two candles right next to each other on the 15 minute, but on the 5 minute, they're more spread apart, right? Because you have more candles in between. Now that's a little better to me. I like to have some type of candle between my SMTs and then the SMT, right? Not two candles right next to each other. So the one that, and again, not too much size between them either. So ideally, you find like a good middle ground, and that's where your SMT time frame will be at. So let's say 5 minute, 15 minute. I'm gonna show you guys charts example after. Say 5 minute or a 15 minute SMT. You target a 5 or 15 minute high. Don't you could leave runners, but your main TP should be five. That's on the same time frame. Now I went through the which pair is weaker. Basically, that means you enter on the weaker pair or the stronger pair, depending on your bullish or bearish. And again, SMTs are cherries on top, not entry signals. Use them as extra confirmation, but also you can use them as TPs, right? So let's say you enter this pair here, like we talked about, right? And you target this low here. ES takes this low, NQ doesn't. It's like this. Take your take profit. As soon as one of the two pairs takes the low that you're targeting, take your trade out or protect your trade. Go break even, but do something about it. Okay. So if an SMT happens while you're in a trade, um, I'm not saying to liquidate all positions. I'm saying protect your position, right? Because SMTs can also be used as TPs. Because if you're targeting this low here on NQ, right? Let's say you're in this trade once again, right? You're in this trade right here, right? You're targeting this low, and ES takes this low. That low's taken. They're correlating asset. Technically, that low is taken. So again, take most of your profit or your contracts off, go break even, and let the rest ride out, just as if NQ had also hit that low, right? Even if you miss out on a little bit of profit over the long run, the extra probability and the extra kind of capital preservation that it will bring you much more profits in the long run, right? So if you were to look at this chart right here, you're going to notice we do have an SMT right here on NQ and ES, right? Now I could go on let's say a 4 hour and there's an SMT here, right? But again, I don't like this. I like when I have a few candles in between. This could honestly be an hourly SMT as well. It looks fine like this. But on the 15 minute, this is just about ideal, right? We have a bunch of candles in between. You have a few sessions. 15 minute nice SMT going on here. And again, what is the context for this, right? We're bullish overall. Our draw on liquidity is this high here, this London high, right? Let me mark it out for you guys, right? So the draw on liquidity is right here. The what's it called? the bias is to go lower and then go higher, right? Now, NQ is had a little lower low here, right? And then ripped up. ES, on the other hand, had a higher low, creating that SMT. Now, which pair is more bullish between the two? The one that has the higher low. So it's ES. You enter on ES, right? On the candle close, let's say. Oops, wrong one. You enter on ES on the candle close. Your candle close right here. Target your buy side SL at the SMT low. 1 to 4 or 1 to 1.4 RR. You can also enter on the retrace into the fair value gap here. But basically, you enter here. Your stop is at the protected low, right? Which is right here. Again, this low can get taken, no problem. SMT is still valid. If this low here gets taken, trade idea is over. I always say put your stop where your trade idea is validated, and that is where the trade idea is invalidated. Now you enter on the stronger pair and you put your stop at the right place. Okay, you target your high. You can leave some runner for a little extra profit if you want. But basically, the context here between the two is that we made this high. ES bounced not at EQ quite yet, but NQ went into OTE, right? And then bounced. So NQ did go up in premium. NQ did go into optimal trade entry. ES did not need to reach those zones because NQ had already done that. Market is dumping right now. God damn. ES had already done that, right? So again, ES is more bullish. ES did not need to retrace to premium because NQ had done it. We had a nice candle close, creating an SMT on the 15-minute. From there, your trend is bullish, your draw is high, your bias was accomplished. You look for entry confirmations, you get a nice 15-minute fair value gap, pull back into it. You could have entered, let's say, at the halfway point of this 15-minute fair value gap or something. Target it 1 to 1.5 if you want, and would have barely missed it, but you could target it. I like to target 1 to 1.3, so that would have hit, right? Or you could just go for your profit, and then as soon as you hit your profit, you go break even, and then you start taking contracts off when you see bearish price action. But basically, that's kind of like the whole idea behind the SMT. I'm pretty sure I went over everything I wanted to go over. If you guys have any questions, drop them in the comments below. I'll answer everything. Other than that, guys, please don't forget to like, comment, subscribe. It's helped me out a ton. We're almost at 500 subscribers. Absolutely mental in my head. I'm so happy that you guys enjoyed the videos, and I hope that you guys will keep enjoying them. I have a bunch of cool ideas coming for the future. Market is absolutely dying right now, which is crazy. Don't forget to join the free Discord to watch me live trade every single morning, and I'll catch you guys later. Peace.